minute here and then we'll hit record and get started. So yeah, if you got any questions, we're gonna go just maybe over the few names on focus real briefly, and yeah, let's see whatever questions you guys have for today. Just have a chart up here of the NASDAQ, and you can see not a whole lot has changed. Listen, even technically speaking, you sort of see this is forming a little bit of a right side or VCP. I'd like to see, the participation improve if this is to continue to sort of stay constructive here, see us avoid distribution. And, if the uptrend then resumes, hopefully we get some more, potential ideas. But for now, we're a little bit in wait and see mode. Is just, the action. You look at a name like, DMRC, today pops its head out, wham, comes right in. We have some of the mega caps still trying to work Google's, new high ground. Stock's acting well. But, there's just not enough progress, I would say. And Uber's still looking, pretty good as well. And this is just, you could see here, sort of growing into maybe a little bit of a version of what I drew in from last week. If we get another, sort of pivot development over here, I think you can potentially look to maybe even add that name again. But, overall, there's, you got a name like PSTG, this is going the wrong way. Similar AMWD, that one, shook out yesterday. Visa, in terms of open positions, on some news sort of leaking off a little more than we would like. So, I would say all in all, on balance, it definitely more stay cautious until we sort of see that, change in character or get some real follow through in some of these ideas. We get a little bit of progress, but even a name like Uber, only up, a few percent on the name. Anything you want to add there, Brandon?
Nope, I think we can jump into some questions.
Okay, here, let's get started. Anders is asking to critique the buy he made on OII. So let's take a look. Bought on August 30th at 22.60. Right here. Sold half on the 12th with a 14% gain and set the trailing stop with the 50-day moving average. Can I ask, how would you handle the remaining position if it was my trade? Well, first of all, in terms of hypotheticals, this is a trade we actually did make. Bought a little bit actually on this day and added a little bit on this day. And this one, I know we talked about this name a few times. It's got good fundamentals. It's in the oil cyclical group. This is sort of what we're looking at, where this stock looks like it should catch support here. It came out a little bit, kind of sloppy. It had an outside day, poked its head out, and then this was a gap. If it hadn't gapped here, I probably would have. I only added a little bit to the position that day. But if you put this in monolart, it looks really good. You have this reversal day. Yesterday was really the only even slight negative, but you're up. Really from here on the 30th. 1, 2, 3, 4, 5, 6, 7. 7 out of 10 days or so. Good volume. And in the new high ground, this looks to be sort of one of the, I guess, leaders in that oil group. We had a number of the oil names we talked about this set up. So I think you traded it really well. And the only critique I would make is, you had to chase a little bit of a gap here, but it was a small gap. If you're going to chase a gap, this is the way to do it. Where the stock's only gapping up 1% and you're still coming right through this pivot measured down to this low, very acceptable. And so you sold a piece at a multiple of your risk. And then if you want to use the 50-day trail, I think that's a great way to use it. Now you're sort of at break even or better. If you bought here, the 50's catching up, I think that's a good plan. The next question here. Last week's Dino example was identified as a laggard in the oil group. What criteria on a chart do you use to identify if a stock is a leader or laggard? Is it RS, order of breakout in the group, or a combination? Yes, it's both. The first thing though is I would look at the RS rating. So I'm trying to remember what the RS was in this one specifically last week. I think we were in the 80s, weren't we? And your other point, though, is even more important. If you have a number of names setting up, uh, and one's, I'll say, already in new high ground, and this one is, in a base. This is actually in sort of a larger, base. This is more of a laggard, say, than some of the other names where they're already in new high ground, or even something, bigger names that are acting better and have a higher RS. But generally, it's a combination. Here's what I would say too, in terms of relative strength. If the relative strength is below 90, that's usually even a cutoff for me. You're sort of getting into the laggard bin, and the lower you go, the more of a laggard it tends to be. The one exception being sort of IPOs and newer issues, because that RS sometimes hasn't had a time to really catch up, if you will. Kelly's asking, can you please critique ROIV? Yeah, I know this one. Another one. Nice breakout and big reversal. We talked about this on Monday, and I think at the time Monday, this was still sort of inside the range, or maybe we're just starting to engulf. This is the exact opposite of what we want to see. He bought on September 9th. Well, 05. Sold half 9/11 when it went below the previous day's low. If you bought it on this day at 12:05, as it was $12.05, as it was pulling back to the breakout, that is not a buy I would have done. And a few reasons. The first question would be, why did you miss it on this day? Now, maybe the stock blasts off and you weren't in front of the screen, or you weren't fast enough and you miss it. There are times where I will buy and Mark will buy, as the stock pulls back to the breakout. However, I would not be buying a stock that has now pulled back. Let's see, this stock went from 12 up to 1280. You're up more than about 5-6%, and now you're buying it at, as it's pulling back more than you'd like. I'd actually rather buy it sort of above the breakout. There's probably no scenario in which I would buy a name like this after this strong of a close on really good volume. I don't want to see the stock pull back too much, and if it does, I'm not buying more. I'm not going to necessarily stop it out, but that's not a buy I would be doing. If I was going to do it, though, I'd be really tight on a situation like that as well. So let's see, you sold. I like that you sold it sort of incrementally, saying if it takes out the day's low, you're sort of buying 12:05 and stopping out, for about, looks like maybe 20-30 cents. But yeah, in general, I would not grade that trade overall, very well. And then, as I said, whenever you're missing breakouts, you want to be asking yourself, why didn't I buy it at the proper time? Like, what was causing me to miss it? Because again, to the point I was trying to make Monday, if you're buying like situations like this, as they're pulling back to the breakout after missing the breakout, you're going to miss you're guaranteed to miss all the best situations, because the best situations blast off and never look back, or they don't pull back to this breakout point. If half of the trades that work pull out to the breakout, which is roughly about where it shakes out, then you're missing the better half. So, I would be doing some post analysis and trying to discern what is it, that you're doing that's, having you miss the initial breakout.
Yeah, let me just add one other thing. Like, you notice how, I don't know if you covered this, Marky, but how it opened above the that day there, and it traded higher and then started coming in. And by the time it got all the way back to the breakout spot, which is I think where you were kind of looking, 12:05, which is about that area. Like, yeah, it's getting there too quickly, in my opinion. And then two, I just ask you, which you don't have to answer on here, did you buy it as it was turning back up? Because it probably didn't even turn back up. It was probably you're buying it as it's coming in, which you don't really want to do that. You want to make sure that you're buying as the stock is moving in your direction. So I hope that helps. That might prevent you from, getting in something like this. This is kind of just a falling knife, as it's just coming right back into the base. And I think I covered this too in the stock analysis report. And I did say that, hey, it's normal for a stock to pull back, but I mean, ideally this would have been nicer to see this pull back over maybe a day or two. not one day and then go outside. Obviously, you got stopped out. So, I mean, it sounds like you followed the plan that you had in place. So, I guess kudos to you for that.
Yeah, I actually just looked at the intraday, and yeah, this stock never really turned back up intraday, even that day. To Brandon's point, that's another nuance that we like to use, where if you're going to buy a pullback, we still want to see the trade turn back in our direction first. We're not just putting in say a stale limit order and hoping the market comes to us to try and catch the the falling knife. I'd rather pay up even a little bit just to see, if it's turning back in our favor. This didn't really do that, even just sort of looking at a 5-minute. Let's get down to the next question, though. Torsten's asking, why did you choose the stop loss of 2680 on DBX? Just to give it some room is the short answer. Now, you didn't. This area allows you to sort of shake out this 50, where the obvious, the tightest sort of obvious spot would have been the low of this day here. Sorry here, guys. I've got the zoom bar in the way, so I can't see that price to the actual tick. Maybe around the 2738 area, but you also sort of had the 50 here. I thought this might shake out. It might need a little bit more time. You just give it a little bit more room to let it undercut. And this is just, again, why you just start the position here. And then if, this isn't doing anything, we've got a, sort of a textbook VCP here, 1, 2, and now this tightening is widened a little bit, but it's still tighter than this one. So if this can round out in here, and you don't own the name, then you look to buy it, or you add to it. He's also asking about, what do you think of the symbol DKNG? Is DraftKings. Yeah, this is a name, if I'm not mistaken, is running into a good chunk of overhead as well. So you sort of look back. It's just there's no real pivot here. I mean, I see what you're looking at in terms of the right side. This break here is way too big for me in terms of this volume as well, to be interested in this right now, because there's definitely you're running against the longer overhead over here, and then in the short run we're running into now clearly profit taking from this move up here. This is just another one of these names that got really bombed out during the bear market, has had this sort of it's doubled off the lows, but it's still running into a bunch of overhead supply. So and for names that, if you want to play those type of names, a name like a Fastly that we played it's better. It was tighter on the right hand side, where if you look at this, there's no real pivot yet. Let's see. Jeff is asking about Meta. Let's take a quick look. Would you consider buying it today? It's breaking above 310 level about August 10th. If not buyable today, what would you like to see happen to buy it? Well, this is one that's just kind of, you're sort of just wedging up a little bit here. So there's not a clear pivot. I'd like to see it pause, and then I can try my hand at the drawing tool here. And maybe drift back a little bit and put in more of a consolidation and a pivot point that, where we can, again, I'm not doing the best draw on this one, but where I'd like to see, just some more time and tightness on this right-hand side. Get this is a little slow. My drawing is a little sloppy here, guys, but I think you get the idea. Even something like this, where you just get more of a cheat area forming. Like right now, this is how I want to see the cheat form. I'd like even a few more days than this. If it forms a little bit higher, that would be a handle. But here, you just buy the name, say coming through 310, it would be very normal for this stock to pull, maybe even all the way back to the 290 area, into this area as it's forming this right-hand side. Well, if you want to be tight, that's potentially going to knock you out, or at least put you under more pressure maybe than you want to. It may even pull, undercut, these lows and still be acting normal. Remember, the key is we don't want normal price action to knock us out. So if you ask yourself, if I buy the stock here today and it pulls back if a 3, 4, 5% pullback would be very normal and expected, then you're buying a name that may not be price ready. Now, that doesn't mean you can't buy it, but it just means you're lowering, your probabilities, and you have to adjust then for that. And here, there's just no pivot yet. So you just have to wait. Michael is asking a question on TDS. What's the correct way to read this power play? Is the high of the base 8.8 with a correction of only 8%? And what followed was a failed breakout? Or is the high of the base 8.31 with a 22% correction? Well, some of this is just semantics, but this is where, and I mentioned this, I think it was either last week or the week before, that this, in my opinion, yes, this has the power, but again, rules, there are rules for reasons. And normal standard rules, if you read Mark's books, come to the Master Trader program, we talk about, it's usually, or not usually, the rules are minimum of 2 weeks, ideally, 2.5 weeks even. This does not have that. It only has 7 days. And there's not really a pivot. So you're just sort of trying to buy the first turn up after a 7-day pause after this huge move. So what I did say is I would expect this then to have a short move and some type of a correction. And sure enough, that's exactly what you had, where a normal power play, or by the rules, is you have to have a double within 8 weeks, and then it's 2 to 6, 7 weeks of a corrective period that's not more than 20 to 25%. Well, this didn't really meet that at any point. Now, yes, could you remeasure it to here? And let me see here in terms of a percentage. Now this is pressing it, in regards to, this is a little more than 20%, but we're still under 25. If this can round out, I don't like, it's just getting volatile now. This is where I was saying before, for a quick trade, you could try this. I don't trade them this short. That's not how I've traded them. I follow the rules, that Mark lays out in his books. But if I was going to do something like this, I would be very quick and very tight. So if you had done this, bought the first, turn higher, as we talked about, and you use this as your stop, you got a 2, 3, 4 hour trade right here, depending how tight you were. And I would have taken the money and run, or taken the money and moved my stop to even, and probably got stopped on the rest. So that's sort of my analysis there. Would you rate my buy on Coco? This is from George. Purchased the stock on Monday, September 11th, just over 29. I was surprised it didn't show up on Focus. By the way, enjoying these sessions with Mark and Brandon. Well, thanks, George. September 11th, just over 29. All right, let's take a look. Well, in terms of buying the breakout, timing this pivot, you did well. The one thing I don't like about this setup, though, in terms of rating the overall setup, is this reversal. This would scare me away a little bit, and I think we might have talked about this. I would want to see this form a little higher, because you just know when you're running into this, the odds are, again, look left, you've got a huge, big volume. I'm assuming this was earnings reversal on this day. So this stock is this supply is sitting over this name. And it's just sort of an important point on some of this supply that I think it's helpful, especially if you're new. Think of, like, the bigger this, this supply is, or in terms of volume, especially in the near term, it's like, if I put a weight vest on you, it's putting weight on top of you that, then you need to get through that in order to move with ease. Now, this stock did get through this, and then we had another reversal, and now it's coming back in. So this is a name that just looks a little volatile to me. This in a vacuum right here, in terms of just buying through this little pivot, I think is okay. I would have graded this setup quite a bit lower because of this reversal.
Yeah, George, and actually we did talk, Marky and I talked about this in-house Monday morning as we were coming up with our own list for Focus. So we did see this, but yeah, that was just too questionable for us given the environment we're in. So
I think that's the other thing, is a good point Brandon was making, is sometimes the environment, listen, you can play, Mark uses poker analogies, you can play hands that aren't aces, and I'm not a poker player, but less premium hands if things are working. So in terms of the market, maybe it's not the best setup, but boy, breakouts are really working. Then you can go up the risk curve a little bit. You want to do just the opposite, though. You want to be even more stringent, more picky, when we're not seeing that action. And if you're wondering, well, what is that going to look like? Then we're not seeing it, because you won't have to wonder. You'll just like, wow, all these names on my watch list and the names on my secondary watch list, things are just, really starting to move, and even less quality pivots are working. It just means that, again, institutions are putting money to work and going out the risk curve, and lots of stocks are moving through bases and pivot points. We're not really seeing that right now. So it pays to be more patient and be more of a stickler. Robbie's asking about Uber. Is Uber a valid pullback buy in the form of the 913 handle area? Let me just remove this stuff real quick, so we can see. And you can see, like, as I said before, this grew in, a little bit into what we were talking about. Just for those who don't know, the name was initially put on right here, added to it as it came through this pullback buy here. Now we're getting another potential, high handle, another pivot, possibly setting up here. 913 was a day you were asking about. This is, sort of a pullback buy. Yes, in a vacuum, sitting on top of this. I would call this a little aggressive. I like this one better because it's sitting more firmly. It's pulling back to this area here. Could you try and add to the position here? Yeah, I wouldn't normally start the position here. Again, the question would be, maybe for an ad, but this was such a better buy point here and even here. But if I was going to, add, just doing a quick measurement here, 48 down to, you could use this stop. And I wouldn't want to be quite this tight, because I think this might drift back even a little more. So I wouldn't want to use this low, say, certainly for the whole position. That would be more aggressive. And again, given the environment, I would say I wouldn't be quite that tight. Let me make sure I get the multiple parts of your question here. When price breaks the high of 912, I enter. Okay, he's giving a hypothetical here. I buy half on the pullback buy and place the stop at 913 low, which is about 2%. And I just said, yeah, I think that's a little tight. In a good environment, I think that would be okay. But even a name like Uber, which is a little bit more like we talked about, it's in this mega cap area. I don't want to be so tight, because I think, again, there's more eyes on these names. There's a little bit more likelihood for aberrant action at time. A 2% pullback is very normal. The price breaks the high of 912. I enter the remaining half. I see what through the all-time high, keeping the stop in the 912 low. Stop loss on this position is 4%. Is this stop too tight for the first half? Do I need to adjust it to the low of 9.7 to give it 6%? Well, I like how you're asking the right questions. Certainly, I would say in a name like Uber, and given the environment we're in, it's probably a little too tight. The other question, though, or what I think you need to think about, is the way we're pointing it out on the platform is a better way to play the name. So we've actually pointed this out in real time. Start your position here, bump it here. Now, if this tightens up even more, or maybe we get a nice drift back, let's say, I'll give you two scenarios of where maybe we drift back a little more. You get a day like this, and you get something here, but you get a good close on this day, a really nice close. Maybe you see some supportive volume coming in. Then you can add to the position again as it follows through that day. And then maybe you do something like this. The stock then puts in some kind of a handle. And you come out here. I would be, and this is exactly how, if we get one or two of these scenarios, Brandon and I'll be looking to add to the name. But so far, it's been a textbook example of how we want to do it in real time on the platform. So I would say this buy here is not necessary and not as good as this one or the prior. especially as I said too, liking to buy some of those larger mega cap kind of names as they're coming off the lows, where even this would be my smallest of the buys, unless it was really perfect and the market was really starting to, we're starting to see good feedback and follow through. He's also asking about Visa. Is it a cap pattern? Want to know if that is the reason for the bump to full. Also, is the cap pattern is just a small pattern that sits, on top of. Oops, sorry, I got the wrong one. I put Polaris, not Visa. Yeah, I think you could call this a cap, sort of sitting on this larger base right here. So the cap would be right here as we're breaking out. And I'm trying to make that as Google. Google to me looks a little bit more just kind of like a base on base, but we'll take, some of this is a little bit semantics, versus a cap, because this doesn't sort of have the, I would just call this, a sort of a shorter base, sitting on top of this other one, holding up very well, as I said before. And I think, Google, even in the sort of mega cap areas, one of your stronger names right now. What do you think about EVR? This is from Matt. I just want to take a look at this on the screen really quick. Yeah, this looks a little bit like a laggard to me. It's also in the, financials group, which isn't my favorite. And the fundamentals don't look that great. But, in regards to, this little bit of a pivot here, I see what you're looking at. It, even I wouldn't chase this gap. I would like to see this tighten up a little bit more and then sort of come out clean. But it's pretty tight here, even on this gap, but not a big mover, in terms of this group. Not a lot of alpha in it. So if I'm going to go, say, into a group like that, I want it to look a little more tight, both in terms of, at least I'd want to see more RS and a better looking daily. But I see what you're looking at, and I do like that it's sort of tight here on the right hand side. It actually looks a little better on the MarketSmith chart than it does here on the TradingView chart. Mod's asking about MANH. I don't see a question about MANH specifically, Ahmad, so I don't know if you just want the analysis. And this is one that's working on the right-hand side. You can see here, we had the squat. Now we're working on a reversal recovery. Can this continue to build out, a right-hand side here? And the jury's still out. Normally, I like to see those reversal recoveries, anywhere between, 3 to 7 days. While we're working on day, 4 here. So I just think it needs a little bit of time. And if it can, tighten up here back into this sort of supply level around 204, 205, and you don't own it and you look to add it, at this point, if it hasn't hit your stop, I think you stick with it. Why wasn't Microsoft bought along with BMW? Well, BMW is one that, it's trying to work here, and I think it is definitely buyable. When we put something on breakout alert, guys, that means it's potentially buyable. Is meeting the criteria and going through a pivot. Why we're not putting on official position, maybe we could be a variety of reasons. Either we have enough, overall exposure, don't want to put more on, taking more of a wait and see mode. Maybe it's a liquidity issue. It can be a lot of reasons. Right now, we're just not seeing a ton of progress. So this is a name, though, holding up pretty well. You can see, you've had this drift back. You've had, one tightening, 2, and then you had this tiny little cheat area here. Reasonably, you're looking, mid single digits, even down to this stop, which I think is very acceptable. So this would be one I would start a position. Similarly, start a position for a variety of reasons. One, we're not seeing names just blast off, so you don't have to be in a hurry. And then if you get more of a developed right side or another buy point, you add to it. If not, and the name starts to rip, and you have a position there as well. So, but this is one of the better acting names right now. Question about, you did ask about Microsoft. The short answer there is it's just not tight enough yet in terms of an actionable pivot. a little bit like, I mean, could you try and play this on a name on a day like today? Again, yeah, you could, similar to sort of the Meta example. This looks a little better than Meta. I'd like to see it, pause and form more of a right-hand side. And you're also asked about Palantir, which does not look near as constructive. This break's just too big right now. This stock ran really explosively. We sort of highlighted it on focus. We didn't really get a great pivot, and then here you go. It ran for a little more, and it just needs more time. So this move here, just 30%, and the bounce back, contending with a lot of overhead supplies. There's also another one, that was contending with a lot of overhead supply on the longer time frames as well. So this is an avoid as far as I'm concerned right now.
Yeah, and could I just add to, notice how this is the cheat you're looking at is setting up below the 50. That's not really what we want to see here. And this decline is really steep, like Marky pointed out. So, I mean, yeah, it's just an avoid.
And also, this 50 is sort of flattening out, where it's one thing if the 50 is still in the uptrend and you get that sheet forming just below or coincident with it, that's one thing. Where this stock looks like it might be rolling over here. Also, quite a bit of volume on this decline. So Michael's asking for stocks that mainly trade on foreign exchanges like Race. That's Ferrari. Up. Can we trust the volume we see, and can we even trust the price as its base currency is the euro? Well, certainly, I think the volume is volume, meaning, yeah, they're going to trade a little bit thinner, and some of these, trade on multiple exchanges. I'd be more concerned with just the overall gap risk, meaning, if the stock trades poorly, say in the overseas session, well, that's going to be reflected here, but in a gap. So you just have to keep in mind my concern when you're trading ADRs or those type of things, or stocks maybe that are dual listed. It's just overall liquidity and then potential gap risk. So, but as far as the volume is concerned, volume is volume. Maybe a majority of the volume trades on another exchange. Well, you might want to take that into account. But again, that's going to manifest itself more in terms of a gap if the stock has a big move, outside of our time zone. Let's see, Jerry, we already reviewed ROIV. And just how did I handle the trade? I didn't take ROIV as a trade. Should I have sold half at all and break even? It was a small position. Listen, ROIV is just the classic good setup. If you're going to take this type of a breakout, you've got a nice pattern here. This is classic. So if you bought this breakout properly and got stopped out, you didn't do anything wrong. Sometimes playing good setups don't work. And in a bad market, even the best setups are going to potentially fail. So just because you lost, remember, the ends don't justify the means, and that works for wins and losses. Just because you lost money doesn't mean you made a bad trade. There are trades I lose on all the time where I'll take them 100 times out of 100 because I'm not thinking about just the one trade. I know that there's massive positive expectancy. And we use the poker playing analogies or sports analogies, whatever analogy you're comfortable with. But, if you're a baseball player and you swung at a pitch right over the middle of the plate, did you swing at a bad pitch? No, you just missed it. Well, in poker, if you play aces, statistically, I think Mark says they win 80% of the time. You lose 2 or 3 in a row, you're not going to play aces anymore. No, of course not. That's illogical. Well, that's the same with a setup like this. You play setups like this routinely, you're going to do very well. Is Meta a good example of a low cheat? We already talked about Meta. No, it's sort of wedging up a little bit. It's not even, it was a great example of a low cheat. It would be on focus list and we'd be pointing it out in real time. It's just sort of wedging up a little bit. Keep it on a secondary watch list. And if it forms a cheat, you'll see it on focus. And then we'll be potentially pointing it out. Renee is asking about rating his buys on FNGR. Let's take a look at that. On 9.5. Okay, so you bought the name right here, presumably through this little pivot. The pivot was the high of the day before. Oh, did I get my, sorry, I'm just making sure I got my days right here. Pivot was the high of the day before. So you're talking about the high of this day. Stop is the low of 831. So you really, you bought this name here, sort of coming through, I guess what was, maybe you were figuring was some kind of a pullback buy. This is aggressive and really short, would be my, I mean, I see what you're doing. And if you're going to try, I don't know if this was a 99 RS name. It's also really low priced. If I'm going to play a low price name, I want it to look really good, because just so you guys understand, the lower price names, it's sort of like you're in the junk pile, you know, or you're deep in the bargain bin here, guys. So most of the time, the stuff in there is in there for a reason. That doesn't mean you can't find a shiny nugget every now and again, or a real treasure trove, at the rummage sale. But those are the exception, not the rule, which means I want them to look exceptional. This does not look exceptional to me. It's quite volatile. Now, again, if you're going to play a very volatile situation or something that's, wide like this, I think you're thinking about, okay, where do I just get it as it turns up and see if I can catch it? Well, you did that right then, in terms of you timed it well. So in that regard, I would say if gun to my head, I had to trade something like this, I would probably try and do it the way you did it. But I just think there's better merchandise out there, so you don't necessarily have to be trading $5 stocks that look like this. But in terms of if you were being really tight as it turned up here, all in all, for that type of a situation, it wasn't the worst. But a little too bold maybe for my style, my taste. Let's see, PBF buy on 9.7. Take a look at that too. Pivot was the high of 9.5. Stop is the low of 831. 9.7. Sorry, I'm just making sure. Okay. Yep. So, sort of similar. You're just buying through this 2-day little pause here. Low of 831 down here. This I see what I like the sort of the base better. This was more of a laggard in the oil area though. So my criticism of the trade would be, this is a little short. I actually like this pivot here a little bit better, but I see what you're looking at. It's not a terrible buy. And you're giving the stock enough room here, to work out. So I think all in all, the question though, again, would be, why did you buy, say a name in the energy group that, wasn't as strong as some of the other ones? And keep in mind, it's a cyclical. I would treat this, more like a trade. Just wanted to add to, because seems like we get a decent number of questions, in the lower priced power plays. This is the example, that we highlighted in real time for if you're going to do a low price power play. Juxtapose this with some of the other ones that people have been suggesting, or ones that we had, like the HOLI that got absolutely slammed. Wait, no, I'm sorry, it wasn't HOLI. It was HLO. Where people were saying, can we, I think this was Monday, what do we think of this name? And I was saying it's a little short, and it was running into, a bunch of this supply over here on the longer time frame, just not well formed, tries to come out on this wild outside day, and then yesterday just gets absolutely obliterated. Where if you look at a name like this, and for those of you guys, who haven't been with us very long, if this was a $50 stock, I'd have been all over this name. Here's the double. So it meets all the classic rules. You have the double. This pullback here is just over 10%, catches good support, tightens up. If you look, even in this pivot, this entire period, this is more than 10 days. The volume before it breaks out is the lowest volume in this entire pivot. What is that telling you? Supply is starting to stop coming to market in this range. And sure enough, then volume starts to come in, wham, stock comes out. And this is really just classic. And we pointed this out on this day, 8:29 in real time as it was coming through 540. Now, again, it's a $5 stock. You're still in the junk pile. But if you look, even in terms of our work has shown, the best power plays, move 1 to 3% per day. Well, here you go. I think we're up over 20% in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 days. So there you go. And if you look left, there's not this stock doubles into new high ground and then sets a pivot right here, well, right near new high ground. So once it breaks out, it's clearing out all the supply. This is why the stock can kind of move with ease here. See how much easier this is to stay with than some of these other examples? There's a reason for this. So this is the imprint you want to have in your head. And this is true whether it's a $5 stock or a $100 stock. But again, if I'm going to play a lower price power play, it's going to look like this. And there's a reason why that's what we were pointing out. What is your max position on biotechs? Toby's asking. Well, I'm assuming you're talking about SLRN because of the risk. We don't have a hard rule on max positions for, say, certain biotechs. However, biotechs with no earnings are riskier. We've done very well trading biotechs, but generally speaking, this is where, and to Mark's the point with this setup is why taking the tight stop is better, because often there's an intelligence at work in the market. I know it sounds, if you're newer to markets, it sounds crazy, but I don't think I've ever gotten caught in one of these. Because generally the stock starts acting poorly ahead of time. You get reversals, you get high volume down days. That's not saying it might never happen. And I would never put half of my account or a huge position in a small biotech with no earnings, especially if you know that there's potential news imminent or that type of thing. Where if you know that there's a biotech news imminent, I'd probably just step aside the stock. But as a general rule, we sort of treat biotechs the same as we would any other position. I don't know, Brandon, you have any added color there?
Yeah, I just want to emphasize the idea of making sure you do your research on the biotech that you're looking at or that you bought, to see if they do have any upcoming news coming out. I know RT News is one that you can use. They have a free calendar, if you will. It doesn't mean that there's not going to be a surprise announcement, but at least, you're doing some type of due diligence, so you're not blindsided, or at least the chances of you getting blindsided are a little bit lower.
And yeah, just adjust for the risk accordingly. And the reason I said too, the smaller the biotech and the no earnings, you just know that a bad news item is going to potentially be riskier for that stock. And as Brandon was saying too, even the RT News, sometimes these bad news items, they don't pre-announce that they're gonna come out with bad news, guys. That's why, that's the risk. But again, I wouldn't avoid the group personally. And if you're concerned about it, you just position size a little bit smaller in the riskier situations. Let's see. Doug is asking, do you or Brandon use any other portfolio tracking software other than the tracker on MPA platform to keep tabs of your trades and past performance? Are you able to suggest any that are good? The answer is no, other than Excel. No, we don't use any special software. And I actually, I won't say anything, but I know there are improvements even to the tracking and things within the MPA platform that are really going to take things to another level down the road. And I think all the tools we have here are more than what you need, even with added, say, basic things like Excel, where it makes it there's no need for those extra tools, and so we've never used them. Question here from Bob is asking about Cameco CCJ. Please walk us through the CCJ chart. Yeah, this one's acted really well. We still have a small position in this, not as big. This is a company I've known somewhat about the fundamentals, but we put this on. We highlighted the poll. I think this was on focus list this week here, and we pointed this out as it came through this pullback buy on this date. This is really the last time this stock was buyable, was right here. It sort of came through, and if you sort of see, this was kind of trying to come out of this big base, and then you had this pullback buy, kind of sitting on top. It was pretty tight. It's just a strong stock right now in the cyclical area, again, in a group that's acting well. I think uranium is, in a pretty strong uptrend, at least at this point. So there's not a whole lot to, add. I know we had a question on, I think a week ago, someone was asking about this little pivot. It's just a little too short, at least for me. I did like this reversal, how it just kind of, caught support here. But for right now, it's a really strong extended stock. So there's not much to say other than that, Bob. Prem is saying, why isn't Meta on focus list? We already talked about that. Joe's asking, can you give your thoughts on Akamai? Yeah, I like how this is setting up here. I'm assuming this is earnings. Let me just. Yeah, it's lower RS. Some of these post earnings, the shorter post earnings sort of gap and drift type plays are not ones I've done as well on, unless they're really tight and really perfect. Where I've actually done better where they sort of morph into, 6 to 8 week type bases. But if this stays tight here, I think you can potentially try it, and we'll, maybe even add it to focus list. Just looking at the fundamentals aren't anything real special here, but yeah, I would say it's one to keep on the radar. Janine is asking about ELF, saying you bought a position on 620. I've taken profits multiple times, but still hold a tiny piece. I have a plan in place to sell on a close below the 50. So you bought on, let's just take a look at where you bought, 620. Right here. So presumably you were buying through this, this pivot here, which I'm, to the point I was just making in terms of, I think this was an earnings, sort of these shorter post earnings. This is not the best buy in my opinion. But it's worked out. I see what you've done here, and I like your plan in terms of taking profits or on a few pieces and then using the 50-day trail. So you're in a pretty nice, good sized winner here that's continued to act well. But I'm trying to figure, your question is, I'm trying to figure out if the recent post earnings action of the stock is looking normal. Can you help me evaluate? I would, at this point, I would stick with your plan. If you stuck with the 50, this long, and you're up, it looks like you're up maybe 30% or so on the name. So percentage wise, not quite as, as big, but yeah, this is acting like a stock like I would expect after big earnings, where you sort of filled this gap. And again, now you're working on a base on the right-hand side. So if you're playing it for a bigger move, I think your plan is good and you stick with it. Maybe you get stopped out even as it closes below the 50, but if it resets up a whole nother base, then you just get back in the name. And that happens all the time. We got that question about NVIDIA. Well, you sold your NVIDIA, Mark, when it closed below the 50. It's like, yeah, I stuck with my plan. What are you going to do? Well, if it sets back up, I'll get back in. If you ever sell a position at a profit or a loss, you can always get back in, guys. The key is to have rules, not just to get back in willy-nilly because you want to own the name. That each buy and sell has to stand on its own. So if a name, like whether it's ELF or NVIDIA or any name, sets up subsequent, you just buy it back. Don't get enamored with any one stock because you've held it for a while or that kind of thing.
Yeah, the only thing I'll add there, Mark, is look at the volume over the last, 2 weeks. It's been well below average, and as it's pulling in, its volume's pretty light. So as far as normal, that's what you want to see. So yeah, it does look like it's digesting this fine. And then two, after we had that test of the 50, volume came right back in, pushing it into new highs, and now it's contracting again. Kind of danced around that answer a little bit, but that's going to help you gauge what's normal versus abnormal. Now, if you start, I think like Marky said, sticking to your plan where the 50 is, that's a good plan for now. So if it trades below it, then you should be out. So, but this stock has gone a long way as well. So it could be getting exhausted here.
Nick is asking, do you guys ever look at beta before buying? Would to high low make any difference? I don't. Oh, meaning a high or low beta. I have never looked at beta, and I can speak for Brandon that.
Yeah.
He doesn't either. Suad is saying he bought COCO on 9/11. Obviously, this was for some reason popular among a few of you guys for a quick trade because of the wild action on 8/2, and it broke out because of these reasons. I shifted into holding it longer. There are almost no viable setups. Oh, I see what you're doing here. Sorry. He's listing the reasons he shifted into holding it longer is because there's almost no viable setups, and this is the first one to emerge, so it could be a leader. Good post breakout action so far, coming out of a primary base, new IPO, has good fundamentals, new all-time high. It's industry group, I think Mark Ritchie's favorite. Okay, remember, I try not to have favorites, guys. What I've said in terms of, and I appreciate what you're saying, and you're understanding what I meant by that, Suad, I think, with your comment by saying it's in that area where big winners often come from. Some of the biggest winning stocks in history, being that, consumer retail. This is, they make, I think, energy drinks and like health drinks and coconut milk or, and that kind of stuff. The overpriced retail products that people love, and that can have big earnings power. And you're right, it does have two, I'm just looking here, back-to-back triple digit quarters. I like your reasoning. I like everything about it with the exception of what we talked about earlier. I don't really like this reversal here, and I would have liked to see a better setup. And it looked volatile here, and now here we go. We've got this big breakout, and now even this pullback here is not looking near as constructive as I would like. If this is a potential new key leader, probably not going to have a 10% pullback, 2-3 days after the breakout. That's not how, some of the biggest winners in history act when they break out, say, of a new IPO or primary base. But all of your other, for lack of a better word, the logic that sort of you listed, I don't like the idea, though, that there's no viable setups. So I'm going to hold this one for a bigger move. Just because I like the idea of, hey, the first one to emerge and that you really grab a hold of, you might have grabbed the tiger by the tail. I love the way you're thinking there. And that's true, which is why sometimes even a smaller position in a key leader, I'd much rather have a tiny position in a key leader than no position. So, yeah, everything you mentioned, I agree with the exception of, this is not the best base or setup here. Renee is saying, Mark, that's speaking of me. Can you please offer your eyes on this setup? Looks to be, MAR. I'm see you're using my initials there, Renee. I thought you were talking to me. Maybe you're actually talking about the stock Marriott. Looks to be improving. Would it cheat around here with a stop at the day's low? Say 200 be reasonable risk reward for a trade. I'm just taking a quick look at this. I'm trying to see if you're fully understand your question, meaning just buying it here and putting a stop at today's low. I don't like today's low as a stop for a few reasons. One, because there's no logic that today's low. Sorry, here we got an alarm going off on CDNS. We'll bring that up in a second to take a look at. You know what? Let's just bring that up real quick. We'll come back to your question, Renee. So here's an example of a name on focus that I think is, this is potentially actionable here. This stock, you can see, it's rounded out pretty nicely. It's not, I'd like a little more time on the right-hand side, but here's a situation where I think you can buy the name coming through 244. I mean, if you want to use this low at 236, you're still quite tight, 3.5-4%. Or you can give it a little more room, maybe even let it undercut this low and undercut the 50 and see if this right side can develop even more. But back to your example on Marriott, you're running into this reversal here. So this just doesn't have enough formed. If I was going to be buying this, I'd want to be buying it through some kind of there's no low cheat really developed here yet. You're just sort of buying it in the middle of this range where there's, some resistance over you and maybe some support here. So this low doesn't make a lot of sense to me. And this buy, at least right here, doesn't make any sense. Over 208, right now, it looks like it might be widening here, where if we break out through that today, it just doesn't have the look, is what I would say. And for a stop, I mean, the obvious stop is this 198 level where it seems to be catching some support. Michael is asking, why does fear of regret lead to selling a position early? Well, that's simple. The fear of regret would be that whatever profits you have evaporate, so sort of like you're going to regret not selling it, or not taking any gain. So you take the gain too early, or you're going to regret, letting us maybe a small gain turn into a loss. That would be at least my simple read on it. I don't know, anything to add there, Brandon, when you think about it?
Yeah, not really. It's just this idea of like you got a profit, you want to take it, right? And like Marky just described, the problem is if you just sell a stock because it's going up and you have a gain, you're not you're not sticking hopefully to the plan you have. And for the math to work, you got to get to a multiple of what your risk is. And sometimes that takes time, and I get it. The markets can sometimes be a choppy place, especially recently. So it's harder for you to sit on your hands and let a stock just, go through the normal price action that leads to higher highs. But when you have an approach like we teach here, you're put in a good position to where, over time, you should start to see that, when you buy a stock at the right price, and you have good risk management, you're going to stack the odds or the probabilities in your favor. But that takes time to develop that skill. And even with some of the traders that have come through our office that we've talked to, that's what a lot of people struggle with is just selling too early because they they have the gain and maybe you've been taking losses and you want to start paying for them, but it's just a losing proposition. But selling too early.
And just to clarify too, when we talk about selling too early, we would mean by selling at a price that doesn't make sense given your risk reward relationship. A good example would be we're always selling too early, meaning we often sell stocks that go way, 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 way higher, or what seem like they go a lot higher, because I'm not trying to squeeze every drop of juice out of the lemon. If I'm at a multiple of my risk and I'm happy with the gain and it's extended, you just sell it and move on. That's not selling early. That's selling consistent with your plan and making good, consistent risk reward decisions, or risk-based decisions, meaning the sell is just a function of, a multiple of my average loss. What we mean by selling early is, selling a position that's doing nothing wrong and where you're, say not even, at any kind of a gain. Or meaning a gain that is going to justify the risk that you took to put the position on. We say this a lot. If you sell, your gains at the same as your average loss into strength, you're never going to make any money, assuming that you're going to be right in as many times as you're wrong. So again, just keeping that in mind. Costas is asking about Fastly. A stock like this, how do you handle the situation? We've already nailed down twice some profits, and now the stock is giving gains back. Do you sell or let go to break even point or your stop loss? Well, the answer, Costas, is that's the decision you want to make ahead of time. You want to know that before the stock is now, pulled in, whatever, 12, 15% off the highs and halfway back to your buy point. So that's the question you have to have ahead of time. You want to avoid that indecision where you go, now I don't know what to do. I don't know what I'm going to do. What was your plan? If your plan was, I de-risked the trade enough where I've paid for this last piece of the position that I can take it all the way back to break even, well, I can say this for sure. You should not let this trade turn into a loser. That's for certain. Like your worst case scenario is break even. So, back to some psychology from the last question. If your worst case scenario is break even, That's a good scenario. You have improved your worst case scenario. It's exactly what Mark was talking about in the morning note and tightening up certain stops. You always want to be looking at how to do that. Well, if you decided this is too big of a pullback, I don't want to take it all the way here. You needed to decide that one ahead of time and then position size yourself accordingly, or decide on some type of a backstop. What is the amount of profit you're willing to give back? And that's not, again, that might not be a technical decision. That just might be a personal decision. Hey, I'm happy with the trade. I'm up 3 or 4R. I'm willing to give 1R back. Fine. But then you have to be okay with that as well. You're not going to be able to play, a stock for a bigger move. This is where, again, knowing what kind of trader you are and what your goals are is really helpful. And then making these decisions ahead of time, because the worst place to be is, indecisive while you're in a position, not knowing what to do. That's when, as one of my old mentors would have said, you're just a part of the crowd then, which is what you want to avoid. Kelly's can we explain why CPNG is on the focus list? RS is 88 and 200 is a downtrend. I thought we might get a question on this one. This one little more questionable for sure. But you can see this is a name where trying to put in the right side of a really larger base does have really good fundamentals. But you're right. It is a little bit lower quality, certainly in terms of RS, and where the 200 being flat is just because you're in this big base. If it can tighten up, and I think it's potentially actionable, but you're running into a decent amount of overhead supply. So your questions are warranted. This one, could have gone either way in terms of what was going to be on focus. Toby's saying, what do you think about DMRC buying today? Are the negative earnings of the stock? Well, I talked about DMRC is doing exactly what we don't want to see right now. In terms of, the stock tried to poke its head out, and now, if I was going to try this name, I would have started a position, through the high of 2 days ago. I would have been stopped out by now. Probably, if I was going to start a position here, I certainly would have used either this day's low or this day's low. So yeah, I would. This is just needs time as an avoid for now. You're asking about the earnings.
Yeah, I'll just fill in on the earnings, Marky. So you say are the negative earnings of the stock in the last year's future concerning you? And if you look at the price action on the earnings, which the dates are, I know you guys can't see this on TradingView, but on my screen, the first big move it started to have was 11.4, which was post earnings. So even back a little bit further, that's the second one. So then in May, it had another positive reaction to earnings. So it's like the negative earnings, technically they're negative as they're not making money, but look at the price reaction to those earnings. It's positive. So that's really what you want to look for. When the price is telling you that the news is better than what the earnings, the interpretation of what the earnings are, can be a giveaway. So obviously, up until today, today's price action kind of, the volatility is widening again, right? So we want to avoid this. But as far as the earnings are concerned, the stock's telling you a different story than this, the negative earnings. And that could be just the anticipation of earnings are going to turn soon, or that, I don't know. Maybe they're the sales are coming in the fourth quarter. Who knows? It doesn't really matter. Again, what's the price telling you?
Joanna's asking, the STEM model's been on red, and recently we're told that the market, and especially the individual stocks, aren't acting well. So why have there been so many buys very recently, like IHG, MANH, DBX, GLBE? I'm a little confused. Well, listen, the STEM model, it's just telling you that, look, risk is elevated, and the stock environment the environment for trading individual names is not very favorable. But that doesn't mean there aren't names that are potentially going through viable pivot points or low risk entries. So I've said it many times. Mark said it many, many more times. You shouldn't be buying all the names. We're just highlighting, what is meeting the criteria. Well, if you look again across any of these positions, one, they've been recommended smaller sizes as well. So these are more pilot buys where we're just in the water seeing, can we get any traction, and how are names acting? Um, Again, the job of the platform is just to point out names that meet the criteria. But yeah, you're right. We've been saying, hey, take a more cautious approach, because right now we're just not seeing the action, but we still have some setups. So, and what's going to get us off, say, red on stem faster than anything, is those setups starting to show a change in character. So that's why we're also posting them in real time and taking some positions, because that's what's going to, again, you ideally want to be ahead of the stem model. You don't want to wait for the stem model to change in order for you to take trades. You want to see progress in your trading, coincident or maybe even predictive of, just like we talk about setups predictive of the market. You want your own trading to be that way. These models just become almost like an indicator in your dashboard, where because you have that knowledge and that skill set to be able to trade these things as they set up in real time, and to get aggressive when the time's right to do that. Michael is asking, why is it when you focus on money, it's elusive, but when you focus on process, the money follows? I think what you mean, or what you're asking, Michael, is, what is it about maybe process that's magic or that type of thing? And listen, I think this is true in any area of life. Let's take, I don't know, someone who's an artist, a music artist. Like, did they start playing the instrument because they wanted to make a lot of money, or because they wanted to get good at whatever it was they were doing? And they wanted to become a good guitar player, a good singer, or a good musician, or a good athlete. I mean, no athlete starts playing baseball or basketball or football because they want to make money. They play it because they love the game, and they learn how to play the game really well. Then eventually, many years down the line, the money follows. So the idea being, if you want to make money in the market, really focus on what does it look like to get good at risk management, at proper analysis, at studying the biggest winners in history, at identifying low risk entry points. And lo and behold, if you do that well, you'll find that over time, all of a sudden, you'll have more money in your account or a lot more money in your account than when you started. I don't know, Brandon, anything to add there?
Well, you said it pretty well, but yeah, it's just this idea that, if you always are constantly focusing on the money, you got to be careful with, the decisions you're making, because your emotions are affected by the money on the screen, right? So, when you focus on drilling down the process, I'm working with my sons right now with baseball, right? Fundamentals, fundamentals, fundamentals. It's like you got to build that foundation on a good process. And, Marky and I are, examples of that. We wanted to, make $1 million our first year trading. It didn't happen, but we did get better at the process. And if you focus on getting better at the process, eventually the results will happen. And, the market's challenging because each cycle, a little bit different. So, it's not like, when I first started in 2010 after the seminar, we had a really good market, and I was like, oh my gosh, this is easy. Like, I'm gonna make a fortune in a short amount of time. Well, then the bear market, then our tough period happened. I hate the word bear market, but then a challenging market had hit, and then I had to learn, like, okay, what are my positions telling me? How is my trading going? It was like that was part of the process. Wasn't even on my radar when I first started, because the market was so good. So it's like, you guys don't know, because you guys haven't been around long enough to know that, there's periods where it's going to seem really easy to make money. And then there's periods like now where it's just like, oh my gosh, this is a grind. Is it ever going to change? And, as you continue to get better at the process and get better at, deciphering what the market's telling you, you're going to get better. And then guess what? The money follows.
Well, and I'll just add to it too. Just a quick story. I get people, reaching out all the time. Normally I just direct them to MPA nowadays. Asking for advice or those type of things, and wanting to be as helpful as possible, because people like Mark and others have helped me too. But one of the folks last year, I think, blew up their, lost 80 or 90% of their retirement account or whatever, and it was a pretty sizable amount of money. Told me their story and just doing all the things that we say you shouldn't do, adding to losers and buying stocks and big downtrends, or buying things that look cheap, and of course got caught in the bear market and lost nearly all of their 401k. And they kept asking, well, how long do you think, if I learn your strategy, how long do you think it'll take me to make all the money back? And how long is it going to take me to make all the money back? And I eventually just said, you're asking the wrong question. The question should be, how long will it take me to get good at this? Because you're terrible at it. And so to sort of bring it full circle back to Michael's question, that the reason you focus on process is that's what's going to make you good at whatever it is you're doing. This is true. I don't care whether you're trading stocks or baseball cards or anything else. That's what's going to give you the skill, and as Mark says on Twitter, sometimes you got to get the skill first, then the money follows. So it's time we'll go, maybe one or two more here. John's asking about VAL, what prompted the sell. Well, Mark talked about this on Monday. I can tell you how I handle this, because we still own a small position in this name. And it was exactly what he said. Look, this action on the right-hand side, we talked about this last Thursday, I think, not what we want to see. So you get this rally sort of back in, nothing gained, nothing lost. It was funny, Mark and I think talked about this offline, or maybe he mentioned this Monday. It's like, if this stock goes a lot higher, people are gonna be like, well, why'd you sell it? It's always, darned if you do, darned if you don't. But sometimes when a stock doesn't act the way you want, and you can step out of the way, either with a tiny loss or a tiny gain, you just step aside. And in an environment like this, that wasn't a bad decision. We trimmed the name on Friday, and I actually thought Friday was it was a poor close, which is why you close below the 20 and the 50, you get the snapback. It's just one of these things to reduce. I'd already reduced and decided we were taking, the stop for the rest of the position. So we have a small position. If this can set back up here on the right-hand side, I still do like, I like the base. I know a little bit about the fundamentals of this company from what I understand, huge estimates for next year. And it's in that oil group. So, but it's a tiny position at this point, and it was sort of just a judgment call.
You wanted you to contrast that with OII.
Oh, contrasting this with OII. Well, OII really is, has been the best name. Would you have dumped OII? I would not have. I certainly, meaning when you took profits on, or taking a small loss on the one, would you have sold the other? No, you want to look at each trade, and let it stand on its own. So just because you're reducing VAL, even if they're in the same group, just because you're reducing VAL because it's not acting well, and OII is acting like a champ, you don't just reduce OII. This name, the reason to reduce is because you're at a multiple of your risk here, and it's extended short term. Now, maybe even after this reversal that we're talking Monday, if you're going to sell a stock like OII on Monday or Tuesday, again, you're at 3-4R here. That's why you're reducing, not because of what another stock in your portfolio is doing. Let's see if we find one more here to end on. James is saying, hi, when you had a smaller account around 30K, did you trade differently? Were you doing more short-term trading, focusing more on volatile and thinner names? And how would you operate your pilot buys? Okay, number of questions there. The short answer is no. And I know I've been a little bit mischaracterized, acting like I've made these massive changes in terms of like how we trade as the account's grown. Yeah, that isn't the case. And certainly in terms of the analysis, it's not the case at all. Yes, some of the trading tactics have to change when your liquidity situation changes. But your analysis does not change. Just sort of like Mark was saying, if he trades shorter term, he's still trading off the daily. It's like, we're doing the same analysis. I'm using the exact same screens, guys, I've been using since day one. They really haven't changed. And in the old days, just for a story, like Brandon and I couldn't even both afford a Market Smith subscription. So we shared one, and he would literally Skype me symbol lists. So for those of you who think you got to have all the bells and whistles and all this stuff, like I didn't even have the fundamentals for the first year or two, because I didn't want to pay. I was too cheap to pay for my own Market Smith. So this idea that you can't start small or that kind of, like, don't listen to any of that stuff that people tell you. None of it's true. or at least any of the Debbie Downers and the negative Nancys out there. No offense to anyone named Debbie or Nancy. But the point being, yeah, nothing has really changed other than, like, as I've said, the only reason I was a little more quick to take gains is because that's the fastest way you can turn your edge over. So if you just have a lot of setups and you can do a ton of trading in and out, that's, again, never underestimate small gains compounded over time. Some of you guys need to listen to that statement 25 times, again and again, to figure out what it really means. But that's how turning your edge over, is the key, especially if you have, and that's easier to do when you have a smaller account. The smaller it is, the easier it is. But I didn't focus on, different names in terms of more volatile names. I don't even like that, or thinner names. But names where there's inefficient pricing, yes. Names where I can know very quickly, am I right or wrong? That's where there's massive alpha, which is why, even again, it's like if Google's the only name setting up in the market, it just tells me everything I need to know. It doesn't mean that I might not trade it, but I can just tell you that there's not going to be as much alpha because there's not near as much, alpha in a name like Google as there is in a setup like OII coming out of here. Well, look, this stock's up 15, 20%. So yeah, I think we'll anything to add there, Brandon? We'll wrap things up here in a second.
I don't think so.
So I still see we got a number of questions, guys. Obviously, save them for Monday. We got through an awful lot of them. Right now, not a whole lot changing, but this is where things change quickly. So I'm always amazed at how quickly setups can seem to just come out of the woodwork. They're like cockroaches in that way. So yeah, if you feel like, I'm not getting a whole lot of traction, it's like, don't shut off the screen or go away for weeks at a time. And we could be, getting aggressive in very short order. So in the meantime, monitor the platform for updates, look for the weekend study session, and we'll see everybody back in the trading room on Monday.
Yep. Hope this was helpful, guys. Talk to you soon.